ransomware attacks in the recent past. More crypto transaction oversight is needed. Following the attacks on JBS and the Colonial Pipeline, the US Treasury Department will most certainly explore tightening anti-money laundering laws and enacting additional reporting requirements for Bitcoin transactions. Hackers demand payments after locking victims out of their computer networks in ransomware assaults. Anonymizing payments may create a deterrent for these hackers to continue pushing such ransomware extortion schemes. Hackers are currently using digital currency to evade laws within the traditional banking system. If the Treasury Department applies many of the same anti-money laundering regulations to cryptocurrency transactions, it may aid in the identification of cybercriminals, and perhaps lessen the number of attacks. What would contribute to the effectiveness of these regulations? To begin, demanding disclosure of who is utilizing the digital wallet and where the cryptocurrency ransom is being paid would be a good place to start. Legislators may also wish to explore regulating the trade of cryptocurrencies for other currencies, such as the US dollar. What's the issue? Cryptocurrency rules in the United States would not extend to countries where fraudsters frequently withdraw their funds. Of course, authorities in the United States might employ penalties to restrict exchanges from transacting in US dollars unless all players agree to adopt a crypto reporting system. Of course, this isn't the first time this error has been brought out. Late last year, the Treasury Department proposed a rule requiring banks and exchanges to record transactions over $10,000 that use digital wallets that are not maintained by a financial institution. This is identical to the current rules for cash withdrawals in excess of that amount. This type of reporting rule would help law enforcement track money movements associated with cybercrime. Customers' questionable transactions are already required to be reported by cryptocurrency exchanges. The proposed rule would require notification for transactions involving unhosted wallets, regardless of whether the transaction is considered suspicious. Anonymous bank accounts are analogous to unhosted wallets. This proposed rule comes after corporations in the United States were warned that paying ransom to hackers could violate US sanctions. That warning advised businesses to work with law authorities in order to avoid liability if they paid a ransom to a sanctioned body in error. After receiving thousands of comments, a Treasury Department official stated that the proposed regulation for reporting crypto transactions is actively going through the regulatory process. When cyber attacks on huge corporations like JBS and Colonial Pipeline affect customers' gas prices and meat availability at the grocery store, it is likely that there will be heightened public scrutiny and a push for action on Bitcoin and other ransomware-related issues. Of course, the underlying issue with these ransomware attacks is the insufficient or lack of security controls in place to secure the data kept at these firms that have been and will continue to be attacked. Businesses should prioritize security and prevention to avoid these assaults and the need to negotiate and pay a ransom in the first place. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.